Let's go to Bloomberg's Equities reporter, Stephanie Hughes. She joins us now with another look at what moved on the market. As Stephanie, Dynamite clothing retailer reported earnings. How did they do?
Yeah, Marilla. So Dynamite shares had its biggest intraday gain ever as the stock surged by nearly 19% at its highest point today. So what happened is that the Montreal-based clothing retailer reported earnings of 25 cents per share and nearly $227 million in revenue that came well ahead of what analysts were expecting. But further to that, the company also raised its full-year sales guidance for the full year 2025. They're now expecting a range of 7 to 9.5% growth in its same-store sales. That's up from a range of 5 to 6.5%. So not a insignificant jump up in guidance or new guidance there. And the analyst community is also giving these results a thumbs up, including TD Cowen's Brian Morrison, who said that this solid outlook supported his team's view that Dynamite's valuation is actually still too punitive. And those at Scotiabank, they were happy that the 13% gain in same-store sales was quite strong in their view, and noted that unfortunately for Dynamite, tariffs had a noticeable impact on the margins there. But they also doubted that investors would pay that much attention to the marginal tariff impact, and said that shares would actually react very positively today, which we saw play out in that double-digit gain. So shares of Dynamite are still down, are still in the red on a year-to-date basis, but a lot of that had to do with the market turmoil that we saw back in April, and the stock has nearly fully recovered on a year-to-date basis so far this year, Marilla.
Okay, let's talk about Nutrien as well. Shares had started to recover there, but they're down today. So what happened?
Yeah, that's right. So Nutrien shares fell by over 1% today, which isn't a major move, but it is its biggest drop since late May. And that's because Raymond James analyst Steve Hansen downgraded the company to a market perform rating from an outperform rating. That's like moving a stock to a hold from a buy rating. What he said basically is that he called the outsized share gains in recent months, or he said the share gains in recent months were outsized, and added that while they continue to admire management's solid progress towards the long-term objectives, they think it's just prudent for their team to step to the sidelines when it comes to this name, Nutrien, which is a fertilizer producer. So they're in a wait-and-see mode. That's what's driving the downgrade today, Marilla.
Got it. All right, Stephanie, thanks for the update. Appreciate that.